हेलो एवरीवन। वेलकम टू माय चैनल इनसाइट्स। आज है 7th of August 2023। सो टुडे वी विल गोइंग टू रीड मिंट न्यूज़पेपर। जो बेस्ट आर्टिकल्स हैं आज जो मिंट में आए हुए हैं हमारे एग्जाम पर्सपेक्टिव से वेरी इंपॉर्टेंट, बैंकिंग एंड फाइनेंशियल अवेयरनेस के व्यू से जो बहुत इंपॉर्टेंट है, वो आर्टिकल्स आज हम करने वाले हैं। लेट अस बिगिन। सो द फर्स्ट इज मिंट प्राइमर। आज हम सबसे पहले मिंट प्राइमर के ऊपर नजर डालेंगे। दैट इज आईटी इंपोर्ट कर्व्स लाइसेंस राज और मेक इन इंडिया। Recently, you must have seen the statement from Ministry to issue the license for importing electronics or IT hardwares from the other countries. So that is the main reasons behind this is because we have a higher trade deficit with China. So that we want to gap it out, reduce the gap of the trade deficit. So one of the most important reason is this. And you can see here some data, factual data, that is $8 billion size of PC and laptop market in India annually, of which two-third is imported, that is 66% is generally imported, and 35% share of India's consumption that is produced locally. Okay, 35% only we produce, and rest 65% is being imported from another country. Now, out of this, the IT imports, whatever we import from another country, that is 77% from China itself. Yes, that is why trade deficit is more with China. That is a merchandise export and import differences. Getting now? And $26 billion value of total IT hardware imports, and 17,000 crore incentive offered PLI scheme for local production. PLI scheme is what? Production linked incentive. The first question is licensing back in India? Yes, at least when it comes to importing IT hardware. On 3rd of August, government issued a notification that restricts free import of laptops, tablets, personal computers, servers, importers. The notification said needed a license to do so with immediate effect. The next day, it clarified that a transition period would be given. I think transition period of some months is going to be given by the ministry in order to comply with all the notifications issued or rules issued by ministry further on. And the notification would come into effect from the 1st of November. You can see the date, very important. That is the 1st of November 2023. And free import is only allowed till 31st of October. So we will see very much a hike in the price of the laptops or PCs because they are being licensed firstly. So that some strictness is going to see in the market. This is the one of the very few instances where India has reintroduced control through licensing. You know, on in 1991, what happened actually? LPG reforms taken place. That is a liberalization, privatization, and globalization. So what happens actually? That liberalization means reducing the licensing norms or licensing raj to be ended. But right now we are again enhancing this thing, that is the licensing. So this is the question, that should we do the same thing or not? Second is, what is the rationale behind this move? While the government has refuted that it is returning to license Raj, it has given some reasons. That is, a Rajiv Chandrasekhar, Ministry of State for Electronics and IT, said that this move will ensure trusted and verifiable system apart from the national security, protecting Indians from the data breaches. And other official attributed the regulation to narrowing the trade balance with China. That is a very important trade balance in China. We have to narrow. And second, that is a data breach is our issue, and third is national security. Now, China, which makes 77% of the IT hardware imports in 2022, India's trade deficit with China crossed $100 billion. This is a very big amount. We have crossed $100 billion to the one country, and for the first time in 2022, that happened. There are others who say that licensing will improve India's self-sufficiency in electronics production. And third is what's the state of India's IT hardware manufacturing? That is only 35% we are producing right now. What is the consumption demand in our country? In the previous financial year, what we have seen, we witnessed India imported laptops and personal computer was $6 billion. Overall, electronics import touched overall electronics means taking every item at a one go. And the center aims to cut such dependence and build a strong electronics manufacturing base through production link incentive. Okay, and what is now we will read about how production linked incentive has done well performed in the IT hardware. So the first version of PLI got a poor response from the firm, found in very unattractive. In May this year, Sandra came out with a revised scheme offering incentive worth 17,000 crore. This is a very important figure. You have to remember this, please, for setting up a unit to make the laptops, tablets, other IT hardware. Some say that the move to license imports is an attempt to get more companies to sign up for the revised PLI schemes, which is open till the month end. The government denies it, claiming it has already received 44 PLI applications. So 44 PLI applications they have received. So they think that this time the scheme, and when they launched in the May, the scheme will do very much better compared to previous one. The notification on the Thursday created chaos with customs officials starting to hold up this forced players HP, Apple, Dell, etc. to stop shipments. Things is when the center qualified that the norm would come effect only from the 1st of November 2023. Experts say computer will become costly if the licensing process is cumbersome and will impact supply chain itself. The central say the Directorate General of Foreign Trade portal, which will handle the application, will take just 5 minutes to issue license. So this thing is very important. They are issuing the licensing norms, and also they say that the within the 5 minutes they would be issuing the license if they found the genuine company to apply it for. And the company has applied with all the required papers, they would be doing the same. So this is a very important thing we have read about. So you have to remember these figures, which are very important in chances of coming in the upcoming exams. Let us move to the next article. There is a nothing to see actually this side, because you can see it's trending dividends again for shareholders. So it is basically about how dividends have performed and how companies are declaring dividends. This is the from the financial year to financial year. You can see very much spike in this era. Okay, so let us move to the first page of the Mint. RBI rate instance to stay on pause hold. So actually, what is said here that Reserve Bank of India monetary policy this week is going to meet, and many economists are expecting to remain the status quo on the repo rate, that is a policy rate. So currently, what is the repo rate? That is a 6.5%. 6.50% is repo rate, and that is a standard deposit facility. What is standing deposit facility rate? That is a SDF, 6.25%, and MSF, that is 6.75%. So they have retained everything in the previous monetary policy meeting, and we are expecting the same again. And they are saying the economists in the view of unchanged repo, And of course, with the instance of withdrawal of accommodation, that is, in the future, they are not going to reduce the rate. Withdrawal of accommodation means the majority to maintain the prolonged pause on the August policy. The market is penciling in a 50% chance of 25 basis hike over two meetings. So they are expecting the same thing, that they will be hike. Uh, so you can see here accommodation means what? To increase the money in the market, but the withdrawal of accommodation means to increase the rate. Getting my point? So increase the rate, that is a hawkish stance is called as per the Fed, US Fed terms. Since the last policy in the June, inflationary pressure have increased with the vegetable price seeing a sharp jump. You can see this thing, vegetable price in tomato, and currently the onion is also going to touch the 70 rupees per kilogram as per the CCI reports. So we have seen yesterday's these things. This is likely to keep headline consumer inflation above 6% over the 2 or 3 months before it starts slowing down. Core inflation is likely to remain relatively comfortable. So, actually, what is a core inflation and what is headline inflation? Core inflation is headline inflation minus volatile prices, that is, the food and energy prices. Economists expect to put onus on more effective administrative measures to quell rising food prices as in top monetary tools. So I think the vegetable prices are increasing. So this is not the way that RBI should increase the repo in order to reduce the inflation. In the other way, they can increase the production of the same vegetable of which prices are increasing. So the price will be cool. So that is a rate cutting cycle to begin only by the first half of the next fiscal year. So this is the same thing has been said with all of accommodation, vigilance on the inflation, supply chain, not only the gut. So this is the same thing we have stated right now. So retail inflation, you can see how it was the in the scenario, that is a 4.9 to 4.8 it present, and repo rate has been continuously increasing to this high. So that's why your EMI is also going to increase or has already been increased till now. So let us see what is more important in this page. Okay, so this is, and the 31st July 2023 was the last date to file income tax return. In that, there was an option to choose old tax regime or new tax regime. So the many chosen old tax. Why many? Because there are some, I think there are some benefits in old tax regime, that is NPS benefits in investment. You can claim 50,000 standard deduction and 10 lakhs rupees of deduction over the investment. So let us see. A majority of personal IT filers has opted for the old tax regime that allows a host of tax exemption, but the new tax regime with more flexible tax rates and fewer exemption is beginning to attract more takers according to professionals who assist taxpayers in filing their returns. In the just concluded season of the personal income tax return, 85% of individuals have opted for the old tax regime and the rest for the new tax regime. So, as analysis by a leading fintech software as a service company Clear. Okay. So based on the data of the tax returns filed using its tax return filing services, Clear has more than 5 million taxpayers as a customer, in addition to many professionals and small and large businesses. Well, this is the only a part of the overall tax returns filed. It points to the broader trends in ITR filing. So you can see that the many are opting for the old tax regime. In the current assessment of CBDT, the due date for the personal showing an improvement of over 16% from the year ago. Okay. According to Clear, there is a notable shift in the taxpayer preference, with 15% have opted for the new and 85% for the old regime. This, it said, highlights a growing interest in the new regime and its potential benefits over the traditional system. Archit Gupta, the founder CEO of Clear, said its force user data showcases that evolving tax landscape in India, where the new regime is going to slow the spotlight, taking the spotlight along with the heightened focus on the tax saving opportunity. Getting a new regime in on the spotlight, but there is no tax benefit is given in the new regime. Mint reported on January, citing the clear there's only 10% of the personal taxpayers have opted for the new regime introduced to the Financial Act of 2020. Okay. Experts pointed to the possibility of new tax regime attracting more takers in the years to come. According to Jain, tax expert and former ICICI candidate, many people have already committed to long-term saving. For example, for salaried employee contributions to employee provident fund is statutory required, and those who have taken life insurance policy will have to continue to pay the premium for these instruments. Similar is situation for those who have purchased houses. Also, interest on provident fund investment is tax free. You know this. These taxpayers have little incentive to shift to new regime, because in EPF what happens actually, in the old regime you get the benefit. Benefit of what? That is a 1.5 lakh rupees benefit per year, per annum. In new regime you don't get. Okay, I would consider that by large those who have opted for the new tax regime are new taxpayers. The adoption of the new tax regime will increase over the time as the new taxpayer increases, and in the case of old tax regime, what happens actually, the investment still on page 6 we will see. uh, so this is the article, very much important, that why people are shifting to the old tax regime itself. Okay, so very important article you should also read. Okay, so join to my Telegram channel. I have uploaded this newspaper on the Telegram itself. You can read it out, reach it out, or to our Telegram channel. So UPI is our digital public code. Will add other public their version. So this thing you should read itself, because I have told you important things from page one and mint primer. That is a very important. So please go through these things, read it once, subscribe to my channel, and next day I would be uploading again the another video of the 8th of August mint primer. Thank you for watching my video. Subscribe to my channel. Keep sharing, keep loving. Thank you.